This is John Paulamy of the Actionable Intelligence Alert. Today is Saturday, July 28th, 2018, and this is the weekly market report. So I know from looking at Twitter and various other places where I go to see what sentiment looks like, it seems like the news that Cameco put McArthur River on care and maintenance for an indefinite period of time, which they further clarified on their conference call, was a very bullish event that happened this week. I'm not going to go into all of the specifics. I highly encourage anyone that is invested or speculating in the uranium market to listen to, actually a couple times, I listened to it a couple times, the report from Cameco that they did a couple days ago. Especially the Q&A is very important also, because there was a lot of excellent information put out during that time. I'm just going to summarize some of the highlights that I think that are bullish. I mean, obviously McArthur River is the largest uranium mine in the world. 10% of the production for the world just basically offline for an indefinite amount of time. This is a slide from the quarterly report slide deck, and Cameco just reaffirmed what they had said before, that they really were not interested, and it's not in shareholders' interest to produce from tier 1 assets into an oversupplied spot market that's trading at these low prices. What I also think is very important and for people to understand is I like the third bullet point here: will capture demand in the market where value. They go into that during the commentary and in the question and answer. I actually laid another slide. Brandon Monroe, who's the CEO of Bannerman, also wrote an interesting article on LinkedIn, which I have a link to, that kind of describes how that might work and how lucrative that could be to Cameco going forward. So this is another slide from the deck. I mean, this is all information that most of us already know about, that we've been talking about ad nauseum. I think, though, that one of the things that the CEO, Tim Geitzel, said during the conference call, and I think is important to note, is that the uranium market is a sentiment-driven market. I mean, we all kind of logically and intellectually get the supply-demand situation, the fact that the industry's in liquidation, the fact that you can't mine something at a cost of $50 a pound and sell it for $24 a pound and stay in business. But what we haven't seen is, and the frustration I think that a lot of people have is knowing all that, how come things aren't moving? How come things aren't repairing themselves? How come the price of uranium is not moving higher? So I think, you know, this news here is going to be like a 2x4 upside the head, I think, of a lot of fuel buyers in the nuclear power industry. I think the game of chicken is coming to an end as these cars, one manned by the uranium producers and one manned by the utilities, are speeding towards each other, as who's going to pull off from that game of chicken the soonest, and who's going to be that first utility, that first big uranium buyer that goes in and says, okay, I need to start buying. I know you're not going to write contracts at $25 a pound, so let's get this done. What's it going to take? And I think that that's coming sooner rather than later. I mean, it simply has to, as more and more of these positives start to pile up. I mean, this is a current slide. Just look at it. I mean, it's just one thing after another. And now with this final confirmation from Cameco vis-a-vis McArthur River, at some point the dam is going to break here. So I think that, as I've said before, it's hard to do, but if you're positioned, it's just a matter of sitting tight now and just waiting for the events to play out. I think I saw a comment by somebody, and that kind of reminded me of something I had read, but it's almost going to be like this slow grind higher that we're starting to see now. A lot of the share prices are starting to move. I did notice that some recent 52-week highs were made in some stocks, various stocks, and we really haven't really seen that much, move in the uranium price. So the money's starting to come into the market. It's going to be a grind higher. I expect at some point when we get the news, when these new term prices get advertised out to the market, when these utilities start coming in, and the realization hits that nobody's going to sign a long-term uranium contract at $25 a pound, that's going to be the final nail in the coffin in the bear market. Just like any other bear market, though, things move well in advance of the actual news. That's why you're starting to see stocks move. If you're interested in this market, I would definitely be doing my research and positioning myself to take advantage. This is the slide right here. It talks about Brandon Monroe, who I think is probably one of the most, this guy really puts out a lot of good information, being the CEO of Bannerman. He's really, just in general, uranium industry discussion that he does. Obviously, he's a CEO of a uranium junior resource company. So he talks, obviously, he's a big, he's going to want to talk positively about the uranium situation. But I think this article that I put a link to here, I would check it out. It's pretty interesting of how he talks about the optionality. Readers and listeners of mine that are long-term know that I like the term optionality when you wrap that around a investment or speculation as another way to make money long-term. Optionality being something that may take place in the future, an option, if you will, the cherry on top of the sundae. So I think if you read that article, in this quote that he has from the article I put on here, basically he's talking about the shutdown of McArthur River and how they're going to position themselves. Says this makes Cameco a significant swing buyer. At current cheap spot prices, it should buy the land at a higher spot prices it can borrow to lend. Basically says that they've set themselves up where they can buy at a certain amount and sell at a higher amount regardless of what happens in the spot price. So they kind of talk about that a little bit in the, when I say they, I'm talking about Cameco management talks about that in their presentation. Like I said, you really need to listen to that, and you really probably need to listen to it a couple times to really understand what they're going to be doing. They're basically going to be like this huge uranium producer, obviously, but also kind of like a uranium hedge fund. It's kind of interesting. I'm still kind of curious about the CRA overhang, the tax situation that they have going on with the government in Canada. But if that comes to resolution, I'm going to become probably really bullish on Cameco. I think for anybody that just wants to get into the uranium market and doesn't want to take a lot of risk with the juniors, Cameco could be an interesting way to play this going forward, because I really think that they're positioned quite well. But we'll have to see how things move forward. I want to give an update on uranium royalty. I spent some time last couple weeks researching this just in the public domain as much as I could find. I put out a call on the last video if people had any information on this or knew anything what was going on to contact me. And I really have to say shout out to some listeners out there. People responded. People that are plugged in and actually know what's going on responded. I really appreciate you guys know who you are. I'll call them my clandestine, ubiquitous informants, if you will. People that were able to talk to the principals of this company, or people that are participating in the private placement that is currently going on with URC. I'm not privy to let out all the information that I know just because it's kind of private. I don't want to get on the wrong side of these guys, and they're in the middle of raising money, and I don't think would be in my best interest to leak information that's not in the public domain. But suffice to say, the company is currently raising more money. There's an expectation, I think, in a desire on the management side of URC to bring the company public later this year. Everybody knows that I'm a big fan of royalty companies. These are excellent long-term investments in my view if they're run correctly. We've seen that with Franco-Nevada, Silver Wheaton, Altius Minerals. These are, if they're run correctly and done correctly and set up correctly, they're tremendous generators of wealth while limiting risk in particular commodity sectors. So I'm really looking forward to this coming public because there is a lot of runway when it comes to royalties in the uranium sector. There just has not been a lot of interest or concentration, if you will, into one entity of a lot of uranium royalties. There's a lot of room to run there. So I think, you know, an entity that's cashed up like URC will be and has the ability to close deals, I think is going to be an excellent investment once it comes public. I do want to make one correction. I think I put out last time that URC owned 15% of Yellowcake. It's actually a 9.9% interest. I just wanted to clarify that. And they are already preparing and executing royalty deals for uranium royalties as we speak. So looking forward to seeing more and talking about more about this and looking at it when it comes public. In addition, you know, there's other entities that are being formed, as we talked about last week. So I think, you know, I don't want to be, you know, accused of hyperbole or pumping or being, you know, and I don't want this to turn into a uranium podcast or a uranium video series every week, but this is where the news is, and this is one of the sectors where we're really see a lot of upside. So it just really, this news last week was, you know, tremendous. We all anticipated it. I think we knew it was going to happen, but the final confirmation, the final affirmation from the company that, you know, it's not a good thing when a bunch of people lose their jobs or get laid off for a long time, but for the overall health of the uranium market, the closure of McArthur River and putting on care and maintenance was the best thing for the company and for the industry as a whole. So not to just talk about uranium, I also want to talk about my other situation that I'm still very bullish on that kind of has receded from the news lately, and that's oil. As you see, this chart here shows the U.S. total liquid stockpile changes year to date, and you have the 5-year average, and then you have time frames of 13, 14, 15, 16, 17, 18. As you can see, last year and this year we are in deficit. The supply of oil, because of the lack of investment, is not keeping up with demand. Therefore, inventories are being drawn down. You know the story. You know what this means. Prices are moving higher. Last week, I think, was the first week in 4 weeks that the oil price actually was positive. What I thought was interesting is I have seen various earnings reports come out and from various oil field suppliers, Baker Hughes, some others that have positively discussed a, you know, we don't have this tremendous rush of capital coming in looking for new reserves, but it's apparent that there's been a turn, or at least an affirmed bottom, if you will, to the oil exploration and oil field services stocks. And having said that, our bellwether that we like to talk about, Ensco reported better than expected earnings last week. This is the updated chart from their presentation. It shows the global fleet utilization of rigs by percentage. You can see back the last 6 significant upcycles that they show here, how long they were in place. You see that once a upcycle gets going, it's almost a rocket ship ride straight up during the upcycle. I think if you look to the far right, the worst recession that we've seen in 2 generations probably in the oil field sector, global fleet utilization is now basically tracking like previous recoveries. So barring a collapse in the oil price, barring some kind of psychotic break in the markets, I think the expectation that we have at Actionable Intelligence is that the oil price can continue higher. I expect over $100 a barrel sometime later this year or early next year. This will be back in the news. These stocks are moving. They're moved off their lows. We are in the positive in a lot of these stocks. I think the comment made on the lower right side of the slide, expect the offshore recovery to be protracted and phased, is probably the most accurate statement and the best way to put what is happening right now. So that's pretty much it for this week. I don't want these things to be, 30-minute diatribes with me just droning on. That's the short and sweet of it. I think that just to review, I think this week really, I don't want to say they ring a bell at the bottom, but if you had any trepidation of entering the uranium market, if you weren't sure where this was going, I mean, when the largest uranium mine in the world in the best jurisdiction can't make money and they shut the thing down and put it on care and maintenance for it until this thing gets, you know, to a reasonable price where they can make a good return on those assets, if you know, I think that's your cue. If you had any kind of lack of confidence, I think your confidence has to be boldened. I don't want to get too hyper, you know, we don't want to get too whacked out here and make provocative statements. This is going to be a multi-year recovery and bull market, but I think we're well on our way now, and I think it's without a dispute with all the positive news we've seen over the last couple months that we're on our way. So I am going to continue. There's going to be opportunities. I mean, some of the shares really kind of went nuts this week and then pulled back. There's going to be opportunities to buy on pullbacks. That's what you should be doing in a bull market. People should have their initial positions on, and just if you get new capital, commit on pullbacks. I just do not see anything but you know, a protracted recovery that's going to take place over several years. So that's it for this week, guys. I really appreciate the support. I'm getting a lot of shout outs on Twitter. I don't put myself up there to be the end-all be-all expert. I'm just a guy. I'm just an investor. I'm just a speculator that's learned a lot. I got a lot of scars. I'm just trying to get my knowledge out there. I have some connections. I talk to some people, but like I said, I'm just like everybody else trying to figure out what's going on. I hope these videos are helpful, but like I said, I'm not the end-all be-all master guru of uranium. There's people that are a lot smarter than me, and like Charlie Munger said, I try to find these people and utilize their knowledge. It's better to do that than reinventing the wheel myself. No one's that smart, to paraphrase Mr. Munger. So I appreciate the shout outs. I appreciate the following. Our newsletter is gaining traction. More and more people are subscribing. People seem to be finding value with it. These videos, I'll continue to make them. I try to engage with people in the comments, just so people know when I'm in the comments, I'm under the username Boobin2. I'm not going to get into why that is. It's just I'm just not going to go back and change it now on my YouTube channel. But if you see me in there, it's basically me sitting in a ger in Mongolia drinking horse mare's tea. So that's kind of the picture you'll see there. So that's me if you want to know who's commenting back to you. So thanks for the support, guys. I feel really good about this uranium market. I hope you do too. And we'll try to bring you the most current information week to week. Thanks a lot for your support, and we'll talk to you next week.